Welcome to Subramani. I'm dealing with a few people who have suddenly hit a big sum of money. One by sale of business and a couple of others by retirement. Some by getting the encashing of their thing that the company got listed. They had ESOPs and the company got listed. So these are all typical categories of people who have got a lot of money. And the first time that they're dealing with such a huge chunk of money. For a person with a 10 crore turnover, 10 crore net worth, getting 130 crores for selling the business is big amount of money, right? For somebody with who is doing a 20,000 rupee SIP, suddenly when they inherit a 3 crores from an uncle where it was unexpected, that's a big amount of money. So depending on what you are, suddenly you are stuck with a big amount of money and you are wondering what to do. So much so that you are saying, if the market rises like this, when should I invest? They have no clue. And secondly, they are worried that if they put a chunk of their money into the market, and the market falls, what will happen to them? Right? Both are very, very legitimate worries. So what do? You go into collecting that money, whatever it is, 3 crores, 30 crores, 130 crores, and keeping it in liquid fund, and then taking a deep breath, maybe for 6 weeks, maybe for 8 weeks, and then sit and do the allocation. Of course, this is there will always be this feeling that the market has not fallen. The market is awaiting the election results, and after the election results, the market will go up. That's what all your politicians have told you, that buy it before 4th of June. After that, there is going to be a bull market, and the market loves stability, right? You heard the finance minister say, "Oh, market, we will give stability to the market." You heard the home minister say the market will go up after 4th of June. You heard the prime minister say that the market is going to boom. Everybody loves a bull market except those who are sitting with a big surplus, like all these 3-4 people who are saying, "Can't the market come down? I want to buy. Will the market come down? When should I invest my money?" Everybody wants to invest when the market is down and sell when the market is up, which is perfectly right. But unfortunately, you cannot choose the sell-off date. Will the market fall? I don't know, because FIIs have done a very good smart move of sell India, buy China. They have done well, right? So if there is more FII selling, will the market come down? I don't know. If the SIP figure is higher, market may not come down. So if you are sitting in a lump sum, you have no choice but to go to the bucket theory and say, I will keep everything in liquid to start with, and from there maybe some ultra short bond fund or things like that, and from there I will put into some equity savings fund, and then I will look at multi-asset, multi-cap or flexi-cap, right? I will look into that, and then if I find all this overwhelming, I will take a big chunk, maybe 70-80%, and put it into index funds or ETFs, right? I can do all these things. All these combinations exist, but the question is, how do you deal with the lump sum which you have got, and you have got it in 2-3 ways. I mean, like I'm saying, this person has got money because his company is getting listed. Of course, I will not name it, and he's going to have a huge surplus. He's going to have something like a 80-90 crore at least on paper with him. Now, typically, if you have been working in a company and suddenly you find your net worth of 2-3 crores, and suddenly you find 100 crores thrust upon you, you are wondering what to do, because people who got ESOPs of HDFC Limited or Infosys or TCS or HDFC Bank, they realized that by selling they lost out, because these shares have done very well later on. But for people who were holding shares in Silverline, Satyam, many of these places, the shares have gone down, so they have lost money. What happened to you? What would have happened to you if you got shares worth, say, 10 crores in Paytm? On listing, it was worth 10 crores. So the typical advice would have been to sell off a little bit, maybe buy a house, repay a housing loan or something. So you got 10 crores, you sold off worth 10 lakhs or 20 lakhs or 50 lakhs because that was your need. And the balance you said, I will sell off every month. You didn't. You thought, oh, now the market is low, I will not sell now. So look at the price, the fluctuation that you have seen in Paytm or in Nika, right? So right now I have the map of I think this looks like Nykaa, so I must be having the map of Paytm also. Yeah, Paytm, you saw such prices of 1600 not very long back. If I take the 5-year cycle of Paytm, which is the longest which I can see, the price was 1648 in November 21, 1648 in November 21. Maybe you sold of 10 shares. Then every month, did you sell or did you buy? Because what would have happened is, then you saw it go down to 571 by March 22. So that's quite a low, because you've seen the price at 1600. Then it went up a little, it went to 784 by July 22. Then it came down to 536 by November 22. Then it went up again, it went to 867 by July 23. Then it was 870 by November 23 and down to 356 today. So assume for a minute that you got these shares at 600 or 700. It's possible that you got it at 10 rupees, but if you had got it at 600 rupees, now you are in negative territory. Should you sell? Should you keep? Why exercise it at all? If you have already exercised and you have the shares, then you have to take the loss. So should you sell out at 356 or should you hold on? Same thing happened with Nykaa also. I have the Nykaa chart also with me, and Nykaa also did more or less the same thing. Nykaa was 400 in May 24. It was at 354. And then today it is at 168. Again we are in May 24, right? So now if I take a 5-year chart of Nykaa, then what happens? It gets even worse. The 5-year chart of Nykaa will see a much bigger fall, and then you are wondering, should you even that was a mistake. It was December 22 that the price was 364, and today the price is 168, which, and it had also hit a low of 120 in April 2023. So with such fluctuations, what would you do? Once upon a time, the companies which did well, or the ones which I told you, like HDFC Bank, Infosys and TCS, they did well simply because you remember them because they did well. It's like saying, oh, if you had bought Wipro at this price, what would be if you had bought Wipro at 10,000 rupees, it would be 700 crores today. That is theory. The question is, what happens to your mind? Would you have been able to hold on? And do I have an answer for this? The answer is no, I don't have an answer for this. But yes, if you have got a big chunk, start selling off X amount every month. I have seen this being done by an entrepreneur, and I told him that when you do this, suppose you sell on the 7th of every month, except during the cool off period. You are on the board, you cannot sell for certain periods in time, like when there are quarterly results or any big announcement, there will be a cooling period when you are not supposed to transact. Right, so but this man had, on the 7th of every month, he was selling an X amount of shares almost automatically, and I told him this can never be questioned by SEBI saying you have done some insider trading because you are selling on the 7th of every month. It didn't matter. If 7th was a Sunday, he would sell it on 8th. If 7th was a Saturday, he would sell it on 8th, right, or 9th. Whatever. So 1 or 2 days after the due date, after the 7th, he would sell it off, and that was done, and that was put as an SIP into 3 large cap funds. So that is what was done. So similarly, if you get shares in a lump sum, or if you've inherited money in a lump sum, is it a good time to invest? Well, that's what the cabinet ministers told you, but like I told ET now, the market unfortunately does not listen to anybody. Like Ken Fisher says, it's a great humiliator. Just at the time when you thought, oh, markets can do no wrong, I've understood the market, now it will go up, it will slap you real hard and go down. Right, these things happen. We have seen these things happen, and unfortunately or fortunately, we cannot choose the day of sell-off. You have to be prepared for the day of sell-off, saying I'm sitting on cash. If the market falls 10%, I'll buy. If the market falls 20%, I'll buy more. If the market falls 25%, I'll buy even more. And I know now we are in bear territory. Is it possible? Is it easy? Yes, for some of us it's easy. It's like sitting on a roller coaster. The first time you sit in a roller coaster, or the first dip of a roller coaster, you have to if you keep your eyes open, then there's no point in keeping your eyes closed in a roller coaster ride. You will scream. And if you're the first, you think something is going to happen. All these roller coasters are well tested. You know you can't fall. You're rightly locked in place, but you will scream. Now, for people like me who have been in the markets in 1979, it is easy to see, oh, this is going to be a temporary dip or something like that. But it may not be very easy it's just like a roller coaster ride. The first roller coaster ride, the first dip, you are very likely to scream unless you very smartly close your eyes, which is a waste of being on the roller coaster. Thank you.